Hello everyone and welcome to MarketOpen Direct Connect webinar, where companies and investors get right to the point of the news that matters, what it means and how it impacts your investment. I'm your host Stewart Walters and we are joined today by Dr. Eric Lilford, nominee CEO, and James Pearse, corporate lawyer and board member of ECOSSAUS Limited. ECOSSAUS is committed to driving positive change in the energy sector and aiming to lead Australia in green hydrogen production and storage. Following this presentation, Eric and James will be available to answer any questions you might have that can be submitted by the Q&A tab at the bottom of your screen. It's now time to introduce our guests. Eric, James, welcome, and over to you.
Thanks very much, Stuart. Thanks everyone for making the time to be here with us today. Now, a little bit of housekeeping before we get stuck in. So we have a presentation which we'll be showing. We're going to skip through things pretty quickly. So there'll be a copy of the presentation together with lots more information on ECOSSAUS at our website, which you can find at www.ecossas.com. And also before we start, I'll just give you the hint to stick around as we have an exciting opportunity we're going to mention for the first time today. So as Stuart said, my name is James Pearse. I'm a founding investor and board member of ECOSSAUS. And with me today is Dr. Eric Lilford, who is a recognised minerals and energy professor and is also our nominee CEO. ECOSSAUS's management team is led by our founders, John Hugh and Mitch Ellis, who are very experienced and credentialed exploration and production specialists. Our management team also has scientific, corporate, financial professionals, and an Indigenous land access and community relations leader, Bob Little. And we all have one clear mission in mind, and that is to lead Australia in green hydrogen production and storage. So we'll jump to the next slide. We've got the usual disclaimers there. I'd encourage you all just to read those in your own time. We'll go to the next slide, which is the company overview. Now, as I mentioned, we have a clear mission to revolutionise Australia's energy landscape by providing scalable, sustainable and cost-effective green hydrogen production and energy solutions. And we're going to do this by using underground salt caverns. Now, what is a salt cavern? In simple terms, you need three things for a salt cavern. You need a thick, dome-like layer of salt, ideally about 500 metres thick. You then need that layer of salt to be a certain depth underground, at least 800 metres below surface. At that depth, salt changes properties. It turns from a solid into a plastic, which is great for storing liquids and gases which don't contain water. You then drill down into the salt and create a space called a cavern by dissolving the salt, and then you can use that space for storing energy. Sounds simple enough, right? Well, in fact, storing energy in salt caverns has been around for decades in North America and in Europe. Historically, caverns have been used to store all kinds of liquids and gases like crude oil, natural gas and helium. But now the focus has moved strongly onto the storage of hydrogen and renewable energy. And there are some huge projects already under construction around the world for these purposes. Now, we think we found the best ground in Australia to develop a salt cavern project. We have 3 project areas in South Australia, Northern Territory and in Queensland. Eric will talk you a bit more through how the project works and the business model, but a great point to highlight early on is the potential for these projects to have multiple revenue streams from an early stage in the project development. Through the cavern making process, 2 things can be produced: high-grade salt and pure water, which can be put through electrolysis to produce hydrogen. And both of these things can be sold off to help offset the project's capital expenditure. The resulting caverns then provide many advantages over the current options for large-scale hydrogen storage, such as in depleted oil reservoirs or in above-ground tanks. And that is the opportunity for ECOSSAUS. That is to capitalise on proven technology, bring that technology home to Australia and deploy it in a rapidly growing addressable market for hydrogen storage and production. Now, if we jump to the next slide, it's worth mentioning that we're not the only ones catching on to this in Australia. The CSIRO has already identified large-scale salt cavern storage in Australia as the most viable option for the new hydrogen economy. And the markets are also predicting that the total energy storage deployments will grow annually by 27% from now until 2030, creating a rapidly growing addressable market. Now, there are other industry players securing ground in Australia for the same purposes, but ECOSSAUS has been around for over 2 years. We have a profound early mover advantage, and we think our ground offers the best and most compelling sites for a salt cavern project due to proximity to industry, infrastructure, and other renewable energy projects. Now, over the last 2 years, we've been working with industry experts such as cavern builders in Europe, the team behind the first proposed cavern in Canada, and we've used all the data and the information we've collected through that process to do a lot of economic modelling and desktop project analysis. And this has revealed a very strong business case for the production and storage of renewable energy using salt caverns in Australia. Now, if we can go to the next slide, just some last words from me before I hand over to Eric. I just wanted to give you guys an idea of the potential scale of these salt cavern projects. Now, South Australia's Hornsdale Power Reserve, the world's first big battery in the mid-north region of South Australia, features 150 megawatts or 194 megawatt hours of installed capacity. Now, one single average size salt cavern could provide over 1,200 times this amount in terms of energy storage. Another way to look at it is the quantity of hydrogen stored in one single cavern could be used to power 60,000 households for a year, or to power 30,000 EVs for about 140,000 Ks each. Salt caverns are big, and they have huge energy storage potential. And the great thing is, once you have found the right salt dome or salt diapier, you can build multiple caverns in the single structure. Now, with that, I'll hand over to Eric to run you through more on how the project works and why the timing is right to do this now. Thanks, Eric.
Thanks very much, James. So if we can move on to the next slide, please. So pretty much in situ leaching will create these caverns in these salt diapiers or domes to the tune of 500 to 600,000 cubic meters each. Each cavern can hold somewhere around 6,500 tons or 6.5 million kilograms of hydrogen. The in-situ leaching creates a saturated solution that we circulate through the surface-placed mechanical vapor recompression plant, and that produces a chloralkali pharma-grade or pharmaceutical-grade salt, but it also produces pure water. The pure water we reuse for further in-situ leaching and creating the next brine or next solution to go through the MVR again, but it also produces the pure water which we're going to electrolyze to produce hydrogen. And that hydrogen is going to be produced using excess grid power. So there is a certain amount of excess power we know for a fact in South Australia. We'll be tapping into this to be very cheap or very reasonably priced or otherwise free. The technology we're using is actually a Danish-designed pressure retarded osmosis technology, and that's going to be producing the green hydrogen. We can produce the green hydrogen contemporaneously with the salt, so we don't have to have the first salt cavern fully commissioned or ready for storage by the time we get to producing hydrogen. So we'll have two cash flow streams very early on in the process. We'll have the salt sales, as I say, into the chloralkali, into the pharmaceutical grade or pharmaceutical industries. And we'll also have hydrogen sales, which you can feed up to about 15% into existing gas lines. And we know that we are very close to infrastructure, including gas pipelines, where we know we've got these salt diapiers in South Australia. But once we have completed the first cavern, it'll take a good number of months to complete a first cavern, then we can actually increase the number of electrolyzers we've got, use more of our pure water that we're producing, and we'll be able to produce more hydrogen that we will still feed into the lines for immediate sales, but also into the gas storage caverns or the hydrogen storage caverns for storage and future use. We can also look at third-party storage. That looks very economically attractive as well. Once we move into greater production of hydrogen with more than one cavern, we'll also look at how do you transport hydrogen across a wider expanse, in other words, into the international markets. And you've got different modes. You've got urea, ammonia, naphtha. You can consider liquefied hydrogen as well, but we know that liquefied hydrogen is a cryogenic process and quite expensive, but it's an option. We move on to the next slide. What we're saying here is that the salt we'll use saline water, so salt or brackish water to start off with. So we'll use saline water originally or initially to dissolve the first feed for the MVR plant. this water we'll get from the deeper lying aquifers. So from an ESG point of view, environmental social governance point of view, certainly the environmental side, we have no intention of creating unnecessary issues or problems. Morgan Stanley, interestingly, has estimated that the hydrogen market will reach around about $11 trillion every year per annum to achieve net zero. So we're not that far off these kinds of numbers. Also, CSIRO says that we need about 800 salt caverns in Australia, each with a capacity of somewhere around the numbers we're talking about, 6,000 tons, to the tune of a total of 5 million tons. That's quite a number of caverns, and that's to reach net zero. So we're well placed to be first mover in this particular regard. And then on top of that, we also have the state and federal governments in Australia supporting a hydrogen economy. We move on to the next slide. So as I said, a first mover advantage sits firmly with us. Even though this technology is actually tried and tested overseas, hydrogen storage is practiced overseas, notably in the US and parts of Europe. James did mention that salt is plastic under pressure. That's important, that it's under pressure that it becomes plastic. So these salt walls actually become impermeable. So as long as you put a dry gas like hydrogen or helium or compressed air, which are all energy retaining gases, even compressed air, that's an important point, that under pressure, the salt walls are impervious, they're plastic, and actually you can draw down these salt caverns to the tune of 30% of overall capacity before you have to replenish. So it's 30% of reduced, or 70% of reduced capacity down to 30% of the capacity overall. You still have enough pressure to keep these salt walls plastic. The high-value chloralkali and pharmaceutical salt-grade markets, they are going to help offset the costs as far as our hydrogen circuits and ultimate production are concerned. So we talk about the costs and the capital expenditure. Well, the fortunate thing is that we've got early cash flows to offset some of those. We also have in excess of 10,000 square kilometers of granted mineral exploration and gas storage licenses already in our quiver, so to speak. And we know that with a number of these concessions, we have got identified diapers in excess of these 500 meters thick, as James alluded to, and they do often start at below 800 meters below surface. As far as the salt is concerned, we have JORC targets in excess of 1 trillion tons of halite, of that sodium chloride. They are at the appropriate depths, and we can continuously produce salt because we don't just have to produce salt from the diapers. We can also produce them from other areas where you've got salt layers that are not in diapers, they're actually tabular. On the management front, we've got notable management experience, expertise, good qualifications, and research capabilities. So we have a pretty strong management backing on what we intend doing. And then when I had a look at back of the envelope economics, I only looked at one diaper. Now, one diaper, you can have multiple caverns, but I looked at one diaper and I got through to confirming for my own benefit, demonstrating economic robustness, pleasing preliminary investment returns and a value. And these aren't conservative bases because we have not done even as much as a scoping study at this stage. There's room to bring further hydrogen production forward in the earlier stages of production because we can increase the amount of water we're feeding through electrolyzers, in other words, the number of electrolyzers, and we can also increase the actual number of MVR plants we've got producing water. The capex is of the order of around about $500 million and slightly above that. But as I've said, some of that will be offset by early cash flows. And then the positive thing is that we will have positive cash flow margins from early on in the process. Back over to you, James.
That's great. Thanks, Eric. We'll just move on to the next slide. Now, I'm sure everyone can gather from the sense of Eric's presentation that there's been some very experienced technical and economic minds looking at this and who have been working on this for some time. So where are we at in our journey and where we're going? You can see in the slide there's a lot more information on what we've done and what we're going to do. But essentially, we had a very successful oversubscribed Series A seed raising just over 2 years ago. And since then, the team's been working really hard on various project and business development activities, including securing the ground of our tenements in our project areas, increasing our South Australian project footprint, and liaising with industry experts to work on our project analysis and economic modelling. Now, we've got more work ahead of us. We need to do more work on our salt to better define and assess the salt. And we'll do that using things like airborne geophysics, gravity, and seismic. And we also need to progress our downstream activities such as marketing analysis and hydrogen and salt off-taking. So you'll see in the materials, there's various phases of project development activities, but the next 12 months is certainly our focus. And we want to work through these next 12 months with a view to then bringing ECOSSAUS to market, ideally through an IPO. Now, as I touched on in the start, we're super excited to be announcing that in the coming weeks, we're going to be launching a crowdsourced fundraising through the virtual platform. We wanted to give everyone the first heads up because you can jump onto our website, which is www.ecossaus.com, and secure your interest before this goes live. Very exciting times ahead, and that's it from me.
James, Eric, thanks guys. Great presentation. We have had a number of questions come through, so we'll ask those now. Just a reminder that you can submit a question through the Q&A tab at the bottom. But our first question is there an exit strategy for early investors? And if so, what is it?
I'll take this one, Stewart. Yes, there certainly is. There's lots of exit opportunities such as farm-ins or project sales, but the one we're really focused on is an IPO, and that'll likely be an IPO on the ASX.
And you mentioned earlier that it will be profitable. How profitable are you speaking?
From a preliminary point of view, because we're going to have salt sales very early on in the process, as soon as you've got the MVR plant, my estimation on these chlor-alkali and pharmaceutical grade salts, which achieve a higher price, we should be looking at free cash flows certainly upwards of 30, 40 odd million per annum. It's difficult to actually nail that down as being exact because, as I say, this is still very much a scoping study level. But the beauty of being conservative, I hadn't factored in early stage hydrogen sales. And if you get the early stage hydrogen sales in as well, you can more than double that. And then once we're into a full diaper that is fully charged with hydrogen, our sales altogether will realize a free cash flow, an after-tax cash flow, likely to be about 5 or 6 times that number I've just quoted. So very robust and a lot of room for further improvement as well on the conservative basis that I've factored all the economics anyway.
One for James, you mentioned virtual earlier, but how much does a project like this cost and how are you going to raise these funds?
Yeah, it's a good question, Stewart. I think Eric mentioned earlier on that the total project capex is about 500 million. That'll be funded through a combination of debt and equity. And like Eric said, the beauty of these projects is there's lots of opportunities to produce cash flow early on in the project development. But right now, what we're focused on is the early stage development, which will likely fund through equity. And that is the money we need to develop our projects to the point that it's ready to bring ECOSSAUS to market through an IPO or through some other exit, like I mentioned earlier.
One that's come in for Eric. How safe is salt cavern hydrogen storage compared to surface tanks or fuel cells?
Interesting question, and a good one at that. I suppose from a safety factor point of view, you've got 2 components. You've got sabotage, deliberate problems being created by humans, and then you've got natural or industrial types of challenges. Let's just quickly hit the sabotage one on the head. Or the fact that these diapers or the actual caverns are sitting at over 800 meters below surface, ranging in extent from 500 to 800 meters vertical extent, going down to over 1.5, maybe 2 kilometers depth. You can't access them from any point of view, let alone sabotage. But I suppose, we like to believe we're in a country that's not going to be a risk. So let's look at the natural safety. We know that surface storage of hydrogen, which is in tanks, you're going to have leakage all the time on the welds, on the joints, on the valves. We don't have surface storage. Yeah, we've got a little bit of surface infrastructure in order to get the material or get the hydrogen into gas lines. So yeah, we might have a little bit of leakage along those lines. We'll do the best we can, obviously, to avoid and mitigate any forms of leakage. But I would say that very safe, on top of which we also have that plasticity in the salt, which is another safety factor, which effectively renders any surface contact area absolutely inert. So safety is built in almost at every level until it's pretty much on surface and being used. But then it's just as safe, stroke as unsafe as natural gas. So not a problem at all.
And Eric, one thing I'll add onto that is, storing things in caverns is so safe that there's a lot of strategic reserve already being stored in them right now. So it is proven.
One last question. Will you market hydrogen? And if so, where to and whom?
Also an interesting question. So you can feed up to 15% hydrogen into existing gas lines without having to change any infrastructure. So that's a primary feed or primary market. So not much marketing needed there. It's a case of getting permission to feed hydrogen into existing lines. And we know that we're in close proximity to lines where some of the diapers are going to be found. And we know they are because geomagnetics have said that that's where they are. The other point is to look further afield, and that is, what is the international market going to be doing as far as hydrogen demand is concerned? I mentioned your transport medium or media being through, urea or through naphtha or through ammonia. So that will feed us into the likes of Japan, which will be large in terms of demand, a good market for us, but also the rest of Asia. So certainly, we don't have a concern as to will we have an overproduction of hydrogen once we get more than one cavern up and running, or more than one diaper with many caverns. We believe that those markets are going to be developed further. They're already in demand now, but they're going to be developed even further in the short term. And one final point is that when you look at offtake and strategic offtake, and just to alert to James on the funding side, you can certainly look to have securing offtake agreements with these big internationals, providing some of the funding to guarantee an offtake. So that's another option for us as far as markets are concerned and funding.
Guys, thanks for your time today. Exciting time coming up for you and the ECOSSAUS team. Just a reminder, any more information you can look on the website, www.ecossaus.com. We wish you all the best and look forward to chatting again soon.
Thanks, Stuart.
Thank you.